What's up, everybody? Welcome to the 22nd episode of the Investing Penguin. Covered calls and cash secured puts. If you are new to my channel, stick around as I reveal the numbers for the month of December. And stick around till the end as I share some interesting facts about Dave Ramsey's study of millionaires. And please hit all those buttons. Subscribe, like, and share. It's supposed to help all of my YouTube algorithms and make me filthy rich. Nah, but seriously, if you appreciate these videos, please support the channel by hitting all those buttons. For those of you who don't know me, I am the Penguin, and in this video, I reveal the profits using covered calls and cash secured puts for the month of December. And wow, December was quite a roller coaster ride with more record highs. When you see the numbers in this video, keep in mind, I like to keep these videos simple, easy to understand with relevant, straight to the point information. There's an acronym that many smart people use. It's called KISS, K-I-S-S. Keep it simple, stupid. And that's how I like to live my life, a simple man. Also, one of the best songs of all time by Leonard Skinner. Finally, I'm here to show you all the juicy details for free. No subscription fees like those other investment channels. So put away the tinderbox. This video is ready to ignite. So before we jump into the numbers, let's take a look at the graphs for December. Here's the Dow Jones Industrial Average. We were down, then we were up, we were down, then we were up. We started December with Omicron news and ended December with record highs during the Santa Claus rally. For those of you who don't know, the Santa Claus rally is the last 5 trading days of December and the first 2 trading days of January. Here is the NASDAQ Composite. Same thing here. We were down, then we were up, we were down, then we were up. Some great opportunities for covered calls and cash secured puts, but you have to act fast. Here's the S&P 500. Same thing here. We ended the year with record highs. This market has just been amazing. You almost have to ask, how can you not make money in 2021? It's going to be very interesting to see how things play out in 2022. Wow, look at the pretty colors. Over $5,000 in profits for the month of December. So the green is covered calls, the blue is cash secured puts, the orange is dividends, and the purple is stock gains. So in the month of December, I sold 13 covered calls and bought back 3 covered calls, generating over $4,000 in premium, aka cash flow. Intel, Verizon, Phillips 66, Bristol Myers, Discover Financial Services, 3M, Raytheon, JP Morgan, Energy Select SPDR Fund. The XLE was the first time that I wrote a covered call with an ETF. On December 20th, oil and energy was getting hammered again, so I picked up 500 shares of XLE at $51.86 a share and immediately wrote covered calls for the $52 strike price. That trade is going to be a 91% annualized return, and for an ETF, that is a great return. You also notice that I bought back and rolled down my covered call trades for JP Morgan, 3M, and Raytheon. I really don't like the buyback trades because that costs me money, but the opportunity was too good to pass up. I was able to buy back my covered call trades on JP Morgan, 3M, and Raytheon for cheap, and then immediately I wrote new covered calls to collect more premium. So in the month of December, I sold 2 cash secured puts and bought back 6 cash secured puts, generating only $95 in premium, aka cash flow. So like I said before, I really don't like to buy back my trades because that costs me money. However, I just wanted to lock in profits before the end of the year. The December roller coaster ride was making me a little nauseous. These are the 6 stocks that I bought back in December, and the premium that I collected back in November during Omicron was really good. So I was happy locking in these profits. So in the month of December, I captured 2 dividend payments, generating over $400 in profits. Intel and Cigna. I love using dividend paying stocks with my covered call strategy. So in the month of December, I had 4 stocks called away. I had covered calls on Cigna, Altria Group, Discover, and Bristol Myers. All these stocks hit their respective strike prices. Cigna, I completed one covered call trade. I'd bought it at 212 and sold it at 212.50. Altria Group, I completed three covered call trades. I'd bought it at 45.97 and sold it at 46. Discover was part of a wheel trade. I'd bought it at 114 via the cash secured put, completed one covered call trade, and sold it at 115. And then finally for Bristol Myers, please check out my last video, episode number 21, where I break down all the money making details for Bristol Myers. It was a money maker. The good, the bad, and the ugly. So not every trade is a winner. You have to take the good with the bad, and the losses are just downright ugly. For you millennials, The Good, the Bad, and the Ugly is a great Clint Eastwood spaghetti western movie. So ending the month of December and going into 2022, I've got over $18,000 in unrealized losses. I decided not to sell these stocks and not to take any tax losses. These unrealized losses don't really bother me since these stocks all pay dividends and I think they will eventually turn a profit in 2022. AT&T has been problematic, but I think it will recover closer to the merger. Kinder Morgan is performing, and I just bought it at too high of a price, so shame on me. Same with Verizon and Intel. I really think all these stocks will recover in 2022, but tell me what you think in the comments below. Should I have taken the tax losses in 2021? Well, that's it. Time flies when you're having fun. Having fun making money, that is. I'm always working on more videos, and please drop your comments below. And stick around for 10 more seconds as I share some interesting facts about millionaires. So if you don't know who Dave Ramsey is, you really need to listen to his radio show. He conducted a study on millionaires called the National Study of Millionaires. And I think what is interesting about this study is that it is pretty easy to become a millionaire in this country. They did it through consistent investing, avoiding debt, and smart spending. No lottery tickets, no inheritances, no six-figure incomes. 8 out of 10 millionaires invested in their company's 401k plan. The top 5 careers for millionaires include engineers, accountants, teachers, management, and attorneys. 93% of millionaires said they got their wealth because they worked hard, not because they had big salaries. 79% of millionaires did not receive any inheritance at all from their parents or other family members. Millionaires worked, saved, and invested for an average of 28 years before hitting the $1 million mark. Wow, only 28 years. Most millionaires reached the millionaire milestone at age 49. That's amazing. Almost 2/3 of millionaires graduated college from a public university or a state school. 94% of millionaires studied said they live on less than they make. Well, that makes sense. Nearly 3/4 of the millionaires have never carried a credit card balance. And millionaires also said they spend $200 or less each month on restaurants. One day you have to earn all the money that you burn. Easy money. Take it. Money music. Electric Light Orchestra. Easy money. So my last video, I spotlighted a song called Clean Money. Well, in this video, it's easy money. Electric Light Orchestra, ELO, was an English rock band formed in Birmingham in 1970 by songwriters and multi-instrumentalists Jeff Lynne and Roy Wood, with drummer Bev Bevan. Their music is characterized by a fusion of Beatlesque pop, classical arrangements, and futuristic iconography. During ELO's original 13-year period of active recording and touring, they sold over 50 million records worldwide. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. And I really hope you enjoyed this video. I'm only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.